Hey guys, welcome to Market Uncharted. Today we continue the series about the Market Outlook 2022 and we are going to specifically talk about the indexes, especially in the United States, and talk about a little bit with hedging. This is also important for us to be aware. So as we can see on the next few days, we have been talking about precious metals, Forex as well, the euro dollar, the DXY, commodities, etc. It's important for leave at the last one, the indexes. And why the last one? Because this is the most tricky one. For the first time in the last few years, we may have a reduction of the balance sheet that the Fed is doing and also increasing on the interest rates. This could create a roadmap with a lot of volatility and difficulties for the indexes. But don't be worried about, as you can see, since the crash of April 2020, a huge rally, 120% going up. And for now, we have been consolidating. More fears is true, more fears on the last few weeks. My prediction is that on the 2022, we may go all the way up to the 5,000. And why the 5,000? Because it's a beautiful level, a round number that attracts the investors. So we are so close with this that it's potential that we go see and touch the 5,000, then a correction consolidating for a few months, a few weeks around 4,400, then the major leg up. This can be considered the melt up, this can be considered the last bull run of the stocks that we can see around 5,500, 5,600, then with coinciding with the Fed reducing the balance sheet, selling the bonds, also putting some pressure by increasing the interest rates, we could see at least 30% of correction. That would put us around here, the 3,800 level. This for me would be a huge buying opportunity for the next few years. If you like dividend paying stocks at these levels, would be a major opportunity in my perspective to buy. Don't forget that volatility will be the common sense across all products in 2022. We have major central banks changing their last overview, and this can create issues. If you want to be invested in S&P 500, on the ETF you have the SPY, the spider as is commonly known in the financial markets, which will have the same behavior as the S&P 500 index. Also VOO, double checked, slightly different price, same behavior as well if you want to be exposed. Nasdaq, which also can be greater corrections than the S&P 500. And why? Growth stocks suffer with the increase on the interest rates. When we have an environment with higher interest rates, this favors the XLF, the banking sector. You have the XLF ETF and also commodities. These are the two, especially energy. These are the two sectors that during a period of interest rates rising that behave the best. That's the opposite for the growth stocks. Why? Because the discounting cash flows for the future will be decreased by increase on the interest rates. Therefore, watch out for Nasdaq. Any major correction on the S&P 500 will be felt even worse on the S&P. On the Nasdaq, sorry. So for me, this is not a good place for 2022. After a major bull run during 2021, where we see the tech sector especially outperforming, now we actually may have the shift between growth to value in the stocks. If that is the case, be aware of major stocks like Apple, Amazon that don't pay much dividends, the discount on cash flows, and especially be aware that 50% of companies in Nasdaq 100 are already below their 50% of their all-time high. So this is not a sector that I want to be exposed at. But if you have a different opinion, you have the QQQ, the Invesco ETF Trust, that follows and tracks the Nasdaq 100. So this is my idea for the index, especially in the United States. Don't forget, S&P 500 tracks and is the mother. All others follow. So if you invest in Europe, if you invest across the world, always look still at S&P 500. In terms of hedging, and this is something that I'm doing already. And as you remember, I said that we may have the final melt up on the stocks. This would take, in this case, the VIX, the volatility S&P 500 index, to this support level around 9 that you can see here. It's a support level that we've been touching for the last few years. It's an important one. At this moment we have VIX at 18, so you can see with a major leg up on the S&P 500, a major leg down on VIX as well, on decreasing of volatility. But after this, once we see S&P 500 with a major correction around 30%, then VIX can touch its all-time highs. As I don't know for sure, of course, no one knows, I'm already buying VIX ETFs to hedge my positions, hedge my long positions that I have in some growth stocks, in some commodities, especially uranium, etc., etc. So this is my hedge. You can pick up yours. Don't forget, if S&P goes the leg up, you have a major opportunity to buy the VIX ETF. Then I believe with the corrections on the major index, you will see a all-time high on the VIX especially. So guys, thank you so much for watching the video. I hope you like it. Never forget, knowledge is not power, knowledge is potential power, execution is everything. And just like the markets, we will not rest.